Hello and welcome to the Trader Masterclass series, where I'm going to take you from, well, I aim to take you from novice till being fully competent in using technical analysis, not just for predicting market moves, but to help you make correct decisions at times of need, because the markets, they fluctuate a lot. And you need to be educated and mentally prepared to deal with those fluctuations as and when they happen, because markets can flip in a second, and if you know what you're looking for, you know how to avoid things, you know how to get into things, that's where you'll make more profit and evidently have less losses. So what we're going to do here in the first lesson is to get your chart set up, and some of the basics, the candlestick explanations, because there's probably a lot of information about a candlestick you didn't know. It does tell you a lot, and drawing the correct trend lines, support and resistance, we'll cover that in today's lesson. Just a quick intro about what I do. I've been a forex stocks commodities trader, technical analyst for around almost 2 decades now for the forex markets. Recently shifted over to the crypto because forex, although a lot of you out there think crypto is extremely manipulated, and you may well be right, forex is far worse, I assure you. At least with crypto, you're always holding something, whether it be a Bitcoin or Ethereum or Ripple or whatever. You've always got some coin in your hand. Whereas in forex, let's just say it's not that straightforward. So we're going to crack on. I'm just going to get straight into it. I want you all to start off at the same level and go through the same things, not skip anything out, and just go through it bit by bit, all singing off the same hymn sheet, and eventually we'll end up with a full group of people who are looking at all the markets, looking for the same things, sharing the same type of charts, and it's essentially putting dozens and dozens of pairs of eyes in the market at once. So we're going to crack on, we're not going to mess about. Not a big fan of that. Right, so first of all you want to go to Trading View. This is where you're going to do all of your technical analysis. So you go to tradingview.com, blah 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 blah. I've already pressed it, so I'm not going to piss around. You don't need the pro version, you only need the free one. So just sign up for the free one, and once you've done that, you'll be all logged in, something like this. What you'll have is some other little boxes around here. Just drag them away, get rid of them, so you've only got one long. Well, you'll end up with one long list once you start adding your coins. So click on the chart. You can save your layouts and stuff like that, but we're not going to go into that right now. Okay, I'm going to strip this down to bare basics. We've got a couple of indicators on here to help us along the way, but I'm going to get you to add them as we go, because it's important that when we add something to a chart, that you know what it does and why you're adding it. There's no point me going and saying to you, right, add this, that, and the other, when you're thinking, why? What good is it? What does it do? We're not going to do that. So we will get rid of every indicator on here. Now what I want you to do is when you're setting this up, just press pause, okay? And I want you to go onto here, and you see the top one I've got here is XRP, so I've got Ripple Bitcoin, okay? So you just type in XRP BTC, and there's the Binance one there. Just click it and it'll go on. If you've already got it, it's going to be there anyway. And just go down this and add all of these. Everyone I've got here, just press pause on the video and add them. Okay? That way everybody's looking at the same charts. So we're going to get much more information and get that information faster. So now we've got that set up, we've got all our pairs. 1 hour chart, okay? There's a reason we use 1 hour charts and not 1 minute, 5 minute, 15 minute example like that. Because you look on the 1 minute, okay? Let's go down to the 1 minute. Look at that. That's a whole heap of madness. You've got this seemingly looking big move there, then it's seemingly coming back. It's just bollocks. Get rid of all that noise. Even on the 15 minute up. Too much chopping. Up, down, up, down, up, down. It's whipsawing. You don't, it's no good. On a Forex chart, yes, it works. But on a crypto, it's just not going to. So we go to the 1 hour, where everything's a lot more meaningful. Now, we've got our bog standard chart, we've got our 1 hour on it, okay? We're going to zoom in, because there's a lot of people that will be first time traders. There'll be a lot of people that have followed the wrong people, got the wrong information, forced in bad habits, and there'll be people that already know what I'm about to say. But go through it, take it all in, forget what you already know, and start from scratch. Okay, when you're looking at the individual candle itself, the higher the time frame, the more accurate information that candle gives. So, if you don't know what candlestick is, you've got this, right? You'll have an open price where the market on that hour, this will last for 1 whole hour in time. It represents price over a 1 hour time period, because that's what we've selected on the 1 hour chart. So we can see how high it's been, where it opened, how low it's been, and where it closed. That is essentially a candlestick. There's more information with these wicks, the longer the wick, price rejections, etc, etc. But we'll go into that more when we go up the time frame. Now that you know what a candle is, obviously you've got bullish and bearish candles. Bullish is a candle that closed being in positive ground, like this one here. All blue on my screen, but they'll be green on yours or whatever. Bearish, they're red here, they'll probably be red on yours as well. That's essentially a candlestick representing your chosen period of time. 1 candlestick, 1 hour, etc. Now that's your quick introduction to setting up your chart with a 1 hour, and the reason why we use 1 hours and don't use the lower time frames. We're going to move on. We're going to start getting more and more involved into it. Right, so yeah, we've got our chart set up. We've got our chart set for price action. It is exactly what it sounds. It's telling you what your price is doing. You can see visually that it's in a downtrend. Now we need an indicator to show us sentiment, because a lot of the time sentiment, which are what people are actually doing, and what price reflects, don't match up. And that's a vital bit of information that you need to know. So we click on indicators here at the top, type in MACD, M-A-C-D, click on it, and it'll come up at the bottom. Don't change the settings or anything like that. Now what the MACD stands for is moving average convergence divergence, which essentially is it's using the moving averages. I'll just make this a bit bigger so you can see it. It's using your moving averages and calculating the distance when it diverges from the price to sentiment and converges back towards price equaling sentiment. You've got this middle line. Now, right as you see, it's represented by a 0 point, and that basically just means neutral ground. You have it over the 100 marker, centered in most terms. If it's over the 100, 200 marker, represented by these moving averaging bars, it's generally overstretched. And then the opposite, when it's deep down here, it's generally oversold. Now, you can't trade solely using this. Your account will get blown to pieces. So we just use that to tell us the sentiment, does it agree with our price action? Okay, so that's why we have that. Now the next things we're going to add to our chart, okay, indicators again. Put in EMA, exponential moving average. Click it twice because we need two of these. And you can see it pops up here, two of those. Close that down. Go into your settings for the first one. You see it's blue. Just make it a little thicker, otherwise it's a bit of a bitch to see. Inputs, change that to 13. Okay. Go onto your cog onto the second one, change that to 48. Style, you obviously don't want it blue, make it a little thicker again, change it to red. Now I'm pretty sure you all know what moving averages are, how they work, but if you don't, it's basically smooth. All this action here, it's smoothing it out into a single visual line. So your 13 period is it's calculating 13 periods back of the 1 hour bar, so 13 hours, hence why it's sticking a lot closer to what the candles are showing. 48 is showing the average of the bars over the last 48 periods. It's removing noise, it's moving all this bounce and all this chatter. Now there is a reason why I use 13 and 48. That's because, long story short, if you do a study of every combination of every different periods of two moving averages, this one is the most accurate in identifying stronger trends. When you get the so-called golden cross, which is when this type of thing happens when the slow period, when the fast period, which is the 13, crosses above the slow period 48, shows you're about to hit into an uptrend. Again, just because a moving average crosses is a piece of the puzzle, it's not the entirety of the puzzle, so you don't just trade on that. And the opposite, the death cross, when it crosses under. You just can't. You can't look at an indicator and say, okay, that's done that, so I'm going to do this. It can't work. You have to incorporate price action and trend analysis. Well, sorry, technical analysis. So our charts are set up now. We're ready to start actively searching for potential areas that's going to give us an interest. How are we going to see what the market's doing? How fast we can analyse it. Sometimes you've got to do things on the spot. You've got to make decisions. A lot of you use the PT bot, and if you understand trends and analysis, you can create your own whitelists, blacklists, which are just essentially lists. Well, whitelist is essentially a list that you want to trade. Black is essentially a list that you don't want to trade. So when you're holding bags as well, and you're stuck in some absolute crap trade, you want to know, do I hold it or do I just ditch? Is it going to go further down? Well, if it's going to go further down by analysis, you don't want to be holding it regardless. You have to trade smart. Whereas a lot of people these days, I'm not saying that people are stupid, because they're not. They just don't know. They've not been told it, they've not researched it enough, they've got over exaggerated expectations. Whereas if you just concentrate, do the basics right first, it becomes very, very easy. So the first bit of technical analysis you're going to add is a support and resistance line. Now these could give you good areas to target to get into trades and to get out of trades when they break. You have to excuse me, I've got a bit of a cold. I am in the UK, so the weather is crap. So right, I'm looking at Bitcoin Tether, and we're going to put in a horizontal line. So we're going to find areas of support and resistance. We're on the hourly. Now, for any trend line or horizontal line, there must be 2 points of contact, minimum 2 points. You can't just go and say, okay, look, there's a point there, I'm going to put that there. That's the top. It looks like price has come off of this, so that we're just going to put that up. Going off just that one doesn't mean anything. You need 2 points. Okay. Now, they don't have to be 2 rejecting points as such, like there and there. If you look back, you can see price has come up. It has bounced off there, come down. It was rejected off there, so you can count that as your first point. You go across, it's rejected again. So you know that that is a good line of resistance. Okay, get another one. Come down, down, down. What can you see? What makes sense? There makes sense. You can see here that price was rejected off that, hovered around a bit, actually bit a couple of fake outs. Again, it held there. That was rejected there. And finally, it broke. Then it was retested and came down. So that's a valid area of resistance. Now with horizontal lines, well, and even linear, which are sloped support resistance lines, once I see this is acting as support, okay, now just because it's broken doesn't make it invalid. If support is broken, it immediately is now classed as resistance, and vice versa. So if price, where can we do it? Yeah, price came down, that one invalid there. But yeah, if that came up to there, came through, blasted through there, this would now become support again. So your lines are still valid. Get another one on. If we put that there, okay, we can see that there was a nice projection at that area. It did come down but turned around and shot back off. Going across a rejection point. Now yes, that is a resistance line, but it's not as strong as the others. The clearer the indication where price is rejected, the stronger it is. Okay, the more times it's been broken, the weaker it is. So let me get rid of this one. This is all just for the benefit of explaining what horizontal support and resistance lines are and how to draw them in. We're not going to go too deep just yet. So that's a horizontal support resistance line. Must have 2 points of contact minimum. And the next thing you need to know is linear. Linear support resistance, aka trend lines. Well, you can same rules apply. You've got to have 2 points of contact. So let me just grab this one here. If I get this here, come down, through to there, would you say that's a good trend line? I wouldn't, because it's not clean. Yes, you've got your rejection there and there, coming all the way along. What it's done, you've got a rejection there, so it's not the best. I don't like it. I'd like things to be a bit more accurate, but it is demonstrating what we're trying to show. 1 point, 2 points, 3 points, let's presume it's 3 times, 4 times it failed to break that area. This big candle here, it finally broke through. Now, as that was a resistance line that's now broken, what happens? It now becomes a support line. So what we would expect this to do, so once it's broken, it needs to be retested to confirm. So that's what you'd expect to happen. Now, once your line is broken and retested and starts to move away, that's your confirmation that this form of resistance is now support. Linears work the other way as well. I'm not liking this chart too much. Let's find one with a better example. I think XRP recently is a prime example. I think it was XRP dollar chart. Yeah. Here's the chart that I put in the Discord where we expected it to reach the dollar, which, if you can see, I drew my trend line from the peak, which is after this move up, to the next peak, and projected price across using a trend line. So this is linear resistance. Okay. So let's dive in a little deeper. First initial point. There's our second point. This hadn't happened yet, so we just projected our line all the way through. You can see I did the same below that to create a structure. We'll go into structures at a later lesson. We just want to make sure everyone's on the same page with trend lines, support, resistance, etc. Right, okay, so we projected that. Now once prices come up, it broke. So what does form of resistance turn into? It turns into support. And look what happened. It broke, it's come back down, and now it's acted as support. So now we can expect it to possibly consolidate a little bit before moving north again. That's how you draw proper trend lines. Now, when you draw one, let's go back a bit. Imagine you drew this one here. That went through there, that went through there. None of this has happened yet, okay? So you've got, oh, there's a point there, there's a point there, rejected off there, consolidated, then broke. It tells you more information. You can see at this point here the price wanted to go down. It's literally, it's telling you. You've got that rejection, your first point, your second point, rejected again, tried to break out, was pulled back, that's called a fake out, and then just consolidated near the bottom. The pressure was downwards. All the pressure was on this support line. It was trying to get through the support line. So now you know, just because of this one trend line, what the directional bias in the near term, probably intraday, meaning within 1 day, trading day, that the pressure for Ripple dollar was to go down. Now I can see a lot of people who just trade moving averages would have seen this crossover and gone, yeah, I'm going to buy. Oh, it's going up, it's going up. Ah, shit, it's crashing. Because they're not looking at the overall picture where these simple two trend lines could have provided all of that information that you were not a buyer. You were only looking for the sell-off opportunities. I.e., if you were in Ripple, you'd convert it back to USDT to Tether. Then when it comes back down, that's when you get back in. So what I'm trying to say about simple trend lines is you can read what direction the market wants to go in, what direction it is going in, and potentially where it's going to next. Constant downwards pressure formed by lower high points, lower low points, lower high point, lower low. Equal high, so it's still not pushing up, it's still on our trend line. With that rejection there would have created this entire line, because that would have created your second point. Pressure down to the downside, constantly banging on the bottom. When it was rejected, did it move up forcefully? Did it create a new high? No, it didn't. It just flatlined right there. So you just knew that was going to break. It was inevitable. And that is how you correctly draw a trend line and how you can interpret what the market in fact wants to do. And if you read it right, you practice it over time, it's just blatantly obvious. It's ridiculous. Okay, so what else from what you can just see here would have helped us determine that this was going to be a decent size bearish downwards run? This is where sentiment comes in from the MACD. Excuse me, from the MACD. We've got our line in, that peak's created our other line. We can see the market's gradually moving down. Just visually we can see that it's not making any new highs. So it's bearish. It's telling you it's bearish. It's showing you it's bearish. Price has moved around. We've got our 2 points here. We've got this line in. When that's created, we've now got a new line in. So we're looking around this point. If we look directly down, we can see Let's just zoom in a bit to make it easier for you. This point here. We can see that the sentiment, what people are doing, is crossing over. It's coming, it wants to come down from an overstretched area. Like I'm telling you, that's overstretched. Central line is neutral, so if it's above the central line, it's in essence in buyer's territory. If it's below the center line, in essence it's in seller's territory. But we've ascertained from the chart, this is why I'm saying you can't just go by an indicator. We know it's bearish, it's acting bearish, constantly seeing lower highs. Market's turning after its little pullback. We've got a cross here, so it's overstretched in the buyer's zone and it starts to move down. Now here's the interesting part. When it got to here, the central line, it's now gone from overbought or overstretched, how you ever want to call it, to being neutral. Now when it reaches this neutral point, it doesn't mean it's going to come all the way back down. It could go back up because this is the buyer's zone. This is the seller's zone. We've got our bearish bias. We've got our linear support resistance or trend line, whatever you want to call it. And we know it wants to come down. And when it's coming down, we can see that we're getting to we're in the neutral area on sentiment. Price is flat, bearish market. Now price has started to move down a little bit more. Okay, you can see it's coming down more, and the sentiment to what people's mentality is, it's no longer neutral. It's gone from buy area on the neutral line. Now it's crossing to the seller's area. Okay, so not only now do we have bearish price action because the failure to break this resistance, and subsequently you've got lower highs forming, which means there's just no pressure to the upside whatsoever. It's all to the down. And then we've got sentiment moving into a seller's area. It just screams, sell me. Now, as price is coming down, you're thinking, yes, happy days. Where do I get out? Price is moving down. What is going to show me that for this particular wave it's done with? Well, you've got your trend line tool. You've got your first point of contact there. Your second point of contact there. Well, none of this has happened yet. And you just project it forward. So as it's coming down, you'd have seen that hit there and rejected off. You think, okay, price is rejected off. I'm now thinking about getting out. So you're seeing the price action. So we're not trading directly off the price action. We now know that that's told us we need to pay attention. Look down into your sentiment. It's not crossing over yet. It's not crossing to come back. It's in the seller zone. So I would hold that to say, okay, nothing is telling me that it's ready to start buying up. It'll come back up just for a little bit. Add another go. Come back up. Now here, you'll be thinking, okay, what's it saying to me now? Price action is saying it still wants to bang on the door. It's still banging on the door of this lower line. It's not making new highs. The sentiment has crossed to start pulling back a little bit. So we're still in bearish mentality. We've got a bearish price action. Price is banging on the door for this line to break. It's tried to break it once, buyers have pulled it back up a bit. Now it's consolidating. But meanwhile, this is why it's important. You see, price action here, okay, is going sideways. Yeah, agreed? So it's a little range bound. In a 15-minute chart, that'll look like stupid great big zigzags. Hence why I use the hourly. It just filters out all that nonsense. It's moving sideways, it's consolidating. But at the same time it's consolidating, sentiment's rising. It's getting back to this neutral level to have another rundown or cross into buyer's territory. So our opinion is it's not going to go into buyer's territory because we can see our bias is bearish. Its bias is coming down. Price action is telling us it wants to come down. It's consolidating now, so it's resting whilst it comes out of being overstretched, oversold to almost neutral, and then pop, another rundown. And that's how you can use simple trend lines, simple price action, and understanding the MACD for what it's trying to show you. You can't just trade on price action. You can't just trade on your indicators. If you can read the two correctly, it all adds up. And with price coming down, you possibly would have thought about getting out of this area here when you saw that sentiment was starting to come back, but it didn't. It hasn't caused a cross. So yes, you're paying attention, but no, you're willing to let it run, and subsequently you let it run. Now this candle here would have told you to get out at the close of this 1 hour, and we'll go into candlestick patterns, what they mean, etc. like that, because this single candle is called a hammer with a long wick at the bottom, short stub at the top, a bit like Thor's hammer, which indicates massive rejection on the bearish side. The candle is finished bullish, and it is a reversal candle, and subsequently it literally told you it was going to do this before it did it. But we'll cover that over other lessons. And that's how you use trend lines and MACD for that reason. We've got a lot more to cover on the MACD as well to spot divergence, and that is very, very, very powerful. You do need to know that, and we will go into that. So quickly we'll jump onto another chart. This is Ethereum. Put that down there a little bit. You'll be amazed at how fast you can spot correct trend lines. Okay, I'm just going to draw, just do it quickly. Trend line there, through the cross to the top. So you've got one touch, two touch, three or four. I'll class that as three quality ones. So where are we expecting price to go to just based on that? We're going to expect it to hit this line. So we've got our mentality that we are in bearish now. We are in a bearish market. Well, we're coming out of one. So you've got to understand market conditions, etc. We are going to cover all of that. We're going to cover it all. What else can we draw in? We can draw that in. See, there's one point. There's your second point. Price came under, got told to piss off. came back under and pulled back up quite harshly. Now, you can see how overstretching the seller's point this was, and the bump up was expected due to how messed up January's markets were. It's come down far further than it should have done. But yeah, anyway, I'm getting off track here. You've got your 2 points of contact. We can expect that to hit that upper line. Sentiment, it's in a buyer's territory. It's resting. So we can see that. We wait for it to come back to neutral. Okay, so it's got to come back to the middle line for sentiment. So we can still expect that to come down a little bit more. But where can we expect it to come down to, price-wise? Okay, now, from experience, I see this as it's nothing. This is nothingness. That's just where there's been an overcorrection and it's pulled back. Once you get more used to putting trend lines in and spotting channels and stuff like that, you'll see that too. We will get there. So from these points of contact, we can go from here to here. That's a lot more accurate in my mind. So we can expect price on Ethereum to come to this area. Before advancing back up to test this. So, just by the time it gets to there, you'll probably find that that matches up with neutral territory. So just by using that, you've now got a trading plan. A very simple, effective trading plan. We are expecting that line to get hit. So far with the market turning and what we know, we're expecting the bulls to happen. And for that to get hit or broken. Do you see how much information this just relays? By using a simple trend line and a bit of sentiment. And when you cross-reference the two, how powerful it can be. Now, like we were saying before, a trend line that was support and gets broken becomes resistance. A resistance line that gets broken then becomes support. So, if price comes down to here and we're in the neutral zone, effectively it can break in both directions, either bullish, go up to there, or we can get a bearish breakout to the next area of support, resistance, or liquidity pool. So what we do, you wait for price to come back to here, and then you analyze again. How is it reacting? Did it get a nice rejection off it? Like, see how this one happened? It was a nice rejection. Or is it just hovering around there? Like we saw before, an example maybe would be, see that there? That's like hovering. You could actually draw a line in there, to be honest. Where was I? There. You can draw mini lines all over the place. But yeah, what I'm saying is, watch what the price does. Watch how it reacts around these areas. See how it's like, it's bounced off, but that's not convincing to anyone. It's moving very slowly, it's not going up. and the moment it comes up to this area that's defined as a resistable area, it's come crashing down. That's a nice rejection of that support. That's what you're looking for. You're only going to get better at it by practicing it. Putting lines in the place, all over the place. Go onto each pair, draw some lines in. Watch how it reacts when it hits those lines. What is sentiment saying? Because the more you watch it, the more sense it's going to make. And when we start using Fibonacci levels and divergence, other areas of confluence, different ways of finding market bias, you're going to find it really easy to pick up, because once you get these basics down, then you've got the fundamental base where everything else is built on. I only do technical analysis. I don't do fundamentals. I don't listen to what anybody else says. Whether there's, I know people like to call it FUD, but I don't really like that word. I prefer to call it bullshit. For example, Ripple signed up this person, that person to do this, that, and the other. Price is going to go up. Well, why is it going to go up? Well, because they've got a new contract with someone. Do you know the ins and outs of that contract? Do you know the agreement of that contract? Are they using XRP? How much XRP is being used? You don't know that, so eventually that information is worthless. Go by what you see. The only people that actually know what news is real and what effect it has are the two parties involved. Everything else, you just trade what you see. And I think that's enough for lesson 1. So my homework for you guys is get on the charts, draw in a few trend lines, 1 hour time frame, post, oh yes, I'll show you how actually. When you've drawn that and you want to post it up in the Trader Masterclass discussion, that's exactly what this is for. Draw your trend lines in, linear, horizontal, whatever, they all work in the same sort of way. Remember, 2 points of contact. You click this little camera here, and it gives you a link. And it gives you a link. You just copy it and then paste it in the message, and it'll automatically show up this chart. And then if there's mistakes on there, I can highlight what's right, what's wrong, etc, etc. And you've got pretty much an entire week to master this area before we move on to lesson 2. Any questions and everything like that, just message me or fire it in the Rogue Trader Discord server, or even in Crypto Stoners Discord server. And that's it. Look forward to hearing from you. Oh, don't forget, there is going to be a weekly podcast, and Crypto Stoners going to host that, which I'll be talking about directional buys potentially for the week on Bitcoin and dollar, a few altcoins that I think might be bullish over Bitcoin, as well as any questions that you want me to answer. Just ask him to ask me those questions and we'll take it from there. Alright, catch you next time.